Good evening and welcome to the Trading the Tech Show. My name is Derek, and today is Wednesday, November 25th, 2020. So it's the night before Thanksgiving, always a very exciting time in the United States because this is one of our major holidays. I hope that everybody is prepared for the holiday. If you're traveling, I hope that you're safe. I hope that, you know, your family members are safe as well. And since this is our last, wow, yeah. This may be the last one um, for the week because tomorrow is a holiday. So I probably won't do a show tomorrow night due to the holiday. Because the market will most likely just be very slow, and maybe I'll take the day. So I want to say thank you to all of our clients, all the individuals who make this happen. Um, I just want to thank everybody. From the bottom of my heart, this has been a dream come true for me. I know this is just the very beginning of the company itself and what we're developing, but you've made it possible for me to actually continue to do what I do, and able to do it with a level of comfort and a level of confidence as well. I appreciate you, everybody who stuck with me throughout all of the last few months that we've been running. Hopefully next year we will have a very great good year. If this year was any preview to what it's going to be like, and then I'm very happy. So thank you once again to all of you. I feel very blessed to have all of you as customers, and anything I can do for you, I am willing to do. So we're gonna take a look tonight at some of the charts here. We're just gonna really kind of go over them really quickly. Just see. I probably won't take a lot of time tonight, but just really kind of go over them and see what's going on as far as the opportunities that may exist. Some of you may still trade into tomorrow. We'll still manage the positions into tomorrow as well. The holiday is not really here in Brazil, so I still will be watching positions. As long as the market's still trading, I'll be watching. Um, we'll take a look tonight and see what's happening. The rest of the world pretty much is still going to be open, so there are going to be some opportunities still to trade. Looking at today's market, our Dow Jones did end up down today. I'm going to go ahead and pull the number for us now so we can see where it ended up. Let's see here. I'm going to take a look here. Dow Jones. And the Dow Jones finished down 173.77 points today. Floated a little bit back below 30,000. It ended at 29,872.47. So that was kind of to be expected. Anytime you reach like an all-time high, like we did kind of yesterday, you're going to probably trade off some. And then the news that we got in the markets today was not very good for the U.S. economy. So that it did hurt us a little bit with the unemployment that came out, and so that's going to be something that weighs on the market. I think we had over 770,000 jobless claims, or individuals filing for unemployment, basically assistance. Um, so that actually was not the news that we really need at this point in time, or that we want at this point in time. The markets definitely kind of were skeptical of where do we go from here if individuals are still losing their jobs and are still applying for benefits, unemployment benefits at higher rates than expected. So it's definitely not a good thing. Our consumer confidence number didn't come in too good either. So it's not, so it's just kind of was a double whammy that we got today. as well. So I'll kind of cover that because in the morning we probably won't have a show for Thursday morning, obviously because it's going to be Thanksgiving morning. We won't have a daily market overview show in the morning either. So we'll cover some of that just tonight. Maybe we'll look at both of those tonight and just see and just kind of combine the two shows a little bit so you can see what's done on the daily market overview show. And then you have an idea of what's in the chart. So maybe let's do it that way. I'm gonna go over here to our website here. Then we'll talk a little bit about what we had as far as the news today, what's to be expected going forward through maybe the end of the week. And then we'll wrap it up with what our charts are looking like here. So today, after our daily market overview show, we were waiting on some things to happen here. We're waiting on some news events to happen, especially out of the US. Now, we did get this autumn forecast statement that came out about 7:45 a.m. Out of Great Britain. So you can look here, you can get a piece of the release here, or at least, some type of summary of the release if you click on this latest release button here under our detail folder here. So that if you've been following us on the daily market overview show, we know that the pound has not, or Great Britain has not been receiving great financial news. There's been some slowdowns, at least in the manufacturing sector, that type of thing, through, that we're learning through the PMI reports and that type of thing. So it's not been great. So we also know that in Britain, there are some lockdowns and things, due to COVID-19 that are being reinstated. So all of that is, hitting the pound. So this forecast statement is going to be important. Now, what does it do? This document provides an updated economic outlook and previews the government's budget for the coming year. It includes expected spending and income levels, borrowing levels, and financial objectives. So you're going to know that this report is going to be extremely important because this is telling us what's the direction of the economy going forward for Great Britain. Now they're still dealing with Brexit, so that's still kind of there, and no deal has really 100% been struck there. So they're still working that out. So this report is going to cover what's, the outlook or the economic outlook going forward into the next year and how the government is budgeting its money. So that's going to have a big impact on the market itself. It's going to have a big impact as far as what the pound does next year. So this is a good release to kind of take a look at it and hold on to in the back of our minds. Now, after that, at about 8:30 a.m., we got a preliminary quarter-over-quarter GDP number. That number came in at 33.1%. That was the expectation, and it was the previous number as well. So it didn't beat or exceed exceed the expectation, nor did it come in lower than the expectation. It came in right on the money. So you know that GDP is a measure of the gross domestic product of our nation. So this is a preliminary number. It's normally going to be a medium weighted report because it's the quarter over quarter number for GDP. It's going to be medium weighted. It's going to have that effect on the market. Now it's going to be overshadowed typically by the unemployment claims because this is the one that impacts most people directly on a daily basis. So people are going to pay attention to the unemployment claims. Unemployment claims actually directly affect spending as well and consumer confidence. So this is why, unemployment claims will get the bulk of the interest from news outlets and individuals who are reporting on the news and the fundamental news. So the number came in at 778,000 new initial unemployment claims. The expectation was 732,000. We're coming off a revised number of 748,000. So this number is growing instead of contracting as expected. So that would have weighed on the markets today. And that's one of the reasons we'd be down about 100, 170 some odd points on the Dow. Be hard to argue for, you know, going against that and just ignoring that unemployment claim number, because that's telling us, there's some trouble still here in the market. Now, we also got a durable goods orders number and then a core durable goods number month over month out of the US. The durable goods number came in at 1.3%. It beat the estimate of 1%. And the core durable good number month over month came in at 1.3%, beating the expectation of 0.5% growth. So the core durable goods is great. It's a different number because you take out transportation. So transportation can be anything like cars, vehicles. It could be airplanes, those types of things. So I mean, even up to that level. So a durable good is anything that you are buying that you expect to keep for an extended length of time, maybe 3 years or more. So vehicles, appliances might fall into that that area. Anything that you buy that you're expecting to keep for a while. These are not really expendable things that you buy. And then when you look at the core durable goods, then that's just subtracting the transportation element, because something like airplanes will skew the number because it's such a large order and it's very, periodical. It's not something that's all the time that you're going to get these orders. So it'll come into the number and kind of skew the number. So they take that out to give us a better look at what the durable goods is really looking like without that. And the core durable goods is the number that calculates that. That's why there's a difference between durable goods and core durable goods. Anytime you see the core in front of one of the reports that way, there's something being extracted from the report that might skew the number. So, so as far as core durable goods and durable goods, that's good. That was good news for the market, but it's a lighter weighted report in comparison, definitely, to the unemployment claims. So people are buying some of these goods that will last maybe 3 years or more, but at the same time, more people being unemployed is going to weigh on the market just a little bit heavier. We got a goods trade balance. That number came out at the same time. It came in at negative 80 billion, 80.3 billion versus a negative 80.2 billion expectation. So it was less than the forecast. So typically that's not a good thing. It's the difference in the value of imported and exported goods during this reported month. So, so for that month, we're importing more. We're importing less than what we're exporting, in this scenario here. So it's the difference in value between the imported and the exported goods, right? All right, so that number came out. We had a preliminary wholesale inventories number that was month over month, came in at 0.9%. The expectation was 0.4%. So inventories, when you think about it on a wholesale level, you don't want rising inventories. If you have rising inventories, that means that your supply is rising, which your demand is going down, which means, okay, so now you're gaining inventory. So now you might want to slow down production if inventories rise to the point that you're not moving your goods out the door. So once you, once you kind of get to that point, you're not spending as much money in the chain, right? So you're not spending as much money buying the materials that you need in order to create these products. So the people that supply you are not going to have more orders. So it just kind of goes right up the chain. So, and typically that means that at the retail level, your goods are not moving either. So that's not a good sign, right? So this is a preliminary number for wholesale inventories on a month over month basis. That number climbing is not good news as well. We also got this morning a preliminary GDP price index number. So This is the change of the price of all goods and services included in the GDP. So we're looking like what's the prices? Is it going up? Is it going down? Came in at 3.6%, but that was the expectation and previous as well. So it's not really moving at this point in time. You can see the history here in August, we did drop. Actually, we dropped down 2%. So for us to gain back 3.6%, that number's been the best that we've seen, at least since August. We had the University of Michigan consumer sentiment number come out at about 10 a.m. this morning as well. Came in at 76.9. That was the expectation. It was just shy of the previous 77 number. So consumer confidence or consumer sentiment actually slipped just a little bit, but not by a whole lot, but it still slipped somewhat. So that number was not a great number for the US economy as well. We had core PCE price index month over month came out. It came out flat, 0% on a 0% expectation. We had the new home sales come out as well. That actually beat expectation. We had 999,000 new home sales versus the expectation of 972,000. So new home sales is going to be important for the market to look at because it reverberates throughout the market. Every time you sell a home or someone buys a home, that's going to reverberate throughout the market, and it's going to cause residual dollars to flow into the market. Everybody from the mortgage individual, the loan officer, to the bank, to the closers, the surveyors, everybody's getting paid along the way. So the real estate agent, all those individuals, whoever's selling the home, it's a new home. So, typically it's going to be a real estate agent, for the builder or whoever, they're going to get paid. It's a nice chunk of money that's going to go to them. So all of those people are adding income along the way. Then you're going to have, all of the things that people buy when they buy a new home. They might have to get a new lawnmower for the lawn. They might have to, buy shovels now because it's wintertime. You got to buy shovels and things so that you can shovel the driveway. All of that's money that you go spend. You're going to decorate the house. You're going to put new things in it. Normally you're going to have some new furniture, or you're going to have, new pictures or some type of, maybe light fixtures or things that you're hanging. All types of things will go, into a new home. So when new home sales are rising, then typically that means that, other sales, retail sales might follow, and, from the new home sales, because everybody along the way has kind of got some money to spend. It's a very, very big transaction. So new home sales, that was a bright spot for the US market today. We have a personal income number come out as well. It came out at minus 0.7% versus the expectation of a flat personal income. So personal income has contracted month over month at almost 0.75%. That's definitely not a good thing. We want personal income to be rising, not going down. Personal spending, however, month over month increased by 0.5%. So it's kind of interesting. We got personal spending going up, but then we've got personal income going down. That's probably not a good thing. So other than that, we had crude oil inventories. We've been watching that on a weekly basis as well. The crude oil inventories were down 800,000 barrels of oil. The expectation was for it to grow, maybe 100,000 barrels, but we're actually down 800,000. So that's good. So basically we lost the previous 800,000 that we gained last week. So supplies, you got to have inventories down in order for the demand to grow for oil. So there's a real balancing act for that to keep the price in a place where it's economically viable for the drillers to pull the oil out of the ground. After that, we did have a release of FOMC meeting minutes. You can definitely check out the detail there. Just click on your detail folder there. You can go here to the latest release. The Fed is going to talk about, what they're doing to keep the market going. what type of purchases are being made, and the kind of money that's being spent and their commitment to it. So people watch the FOMC. Meeting minutes are probably more important than anything, because that's setting the monetary direction of the nation. So as forex traders, we're very interested in that, because if we're looking at what the direction is for the dollar, and for the economy itself, we can kind of guess where the dollar is going to go. Now, our dollar's been kind of reverse correlated, or negative correlated to the Dow Jones. So as the Dow Jones rises, then typically the dollar is going to get weak. And as the Dow Jones falls, typically the dollar is going to get stronger. So that's kind of how we look at that, because it has an inverse relationship right now. So as we look at the FOMC, we see, what it is that they're talking about. Are they still dumping money into the markets? Are they buying and using up these credit facilities and using these other facilities to buoy up the market? If they are, then that means that, the economy is maybe not doing as well as it should, because it's needing help and it's struggling. And so, that might mean that, the dollar may still continue to weaken. So we're looking at, we also had a private capital expenditures quarter over quarter that came out of Australia tonight as well. It's about 7:30 p.m. Eastern time. It came out at -3% versus the expectation of -1.5%. So definitely some contraction there, but less than the previous, which was a revised 6.4% contraction for private capital expenditures. So tomorrow's a holiday, not a whole lot going on in the news, especially for the US. We do have a couple of things out of Europe. We have the German GfK consumer climate number. That's going to come out here at about 2 a.m. At about 4 a.m., we can expect the M3 money supply and the private loans number year over year, all of that out of the European Union. And then at 7:30 a.m., we're looking at the ECB monetary policy meeting accounts number. Of course, yet tomorrow's a holiday for the US, so there won't be any news after that. Check with your broker and make sure whether or not they're going to be open tomorrow, or you at least if trading's going to be open tomorrow. Most of the time it's going to be open. They typically don't close except for major holidays. So some brokers will close tomorrow and have no trading. Other brokers, it will just be very, very, very light as we move towards the afternoon and beyond. So on Friday, not a whole lot going on there either. Out of Great Britain, we're going to get a nationwide housing price index number. And then later on, we'll get a French consumer spending number, French CPI preliminary, and then the French GDP preliminary quarter over quarter numbers as well. So that's how the week will round out. Nothing super huge or big, going into Friday. Most individuals will be, still dealing with the holiday. It'll be Black Friday. That's probably the main thing that we'll be watching. Let's see how the reporting on the Black Friday shopping goes, because that's going to, tell us a little bit about what may happen on Monday, which is going to be Cyber Monday. And what may happen in the markets when they open on Monday. If we're going to be optimistic about, the shopping that happened, was it robust or was it lethargic? Were they seeing the numbers of people's in the store this weekend that they expected, more or less? Because all of that's consumer spending, right? And consumer spending is a huge percent, over 70% of our GDP. So that's telling us where our, country's going as far as, as far as spending and as far as growth in the nation. So we'll see what happens. I don't have any prediction for that. I just want to see what occurs. I think it may be robust. I think people are, a little bit tired of, everything that's kind of been going on news-wise and all that. And I think spending a little money might be a little bit of a break for them. Just having been stuck in the house for a lot of the year, having deprived themselves maybe of some vacation time, maybe, people have postponed weddings, people have, not done a lot of the things that they've wanted to do. And so they may splurge a little bit on holiday. I could imagine that could be a thing. So we'll have to wait and see. That's why I don't know either way. This is very new territory for us. we're going to look at some of the charts now. We're about 25 minutes in, so we should have time. Normally it takes us about 25 minutes to go through the charts. And we're going to look at each one of those and just kind of find out where we are going from here. Looking at the Aussie CAD here on this 30-minute chart, it looks like we are trading well above our 720. So all the moving averages are above the 720. We do have a mature trend here to the upside. We're getting a nice pullback now. So we've got this nice pullback to the 50 right now. So we're going to try to see if this gets a little bit lower than our 50 here, maybe head on down, maybe a little bit more towards this 100, and we'll drop our buy order here on our 50. We could literally drop a buy order here on our 21 if we really wanted to do that. We would just right click, go to trading, buy stop, and we'd place our order there based on the level of the 21, which is our moving average here in red. So if the market commits to a movement to the upside, then we should have momentum to the upside. That is our preferred direction. If it continues to move down closer to this 100, I'll take this take this order and just slide it right down to my 50. I'll just improve my price by a few pips, right? Right now we see that we're getting a nice pushback towards the 100, but we'll see if that actually continues or not. Now, as far as the Aussie yen, we are trading above our 720. And then we are, we're waiting on a pushback here. We're pulled down now below our 50, just a little bit, kind of the same thing as the Aussie CAD. So we're going to be waiting for a pullback towards our 100 moving average here. A little bit closer to that, we can drop our order right here on our 50, or we can drop it here on our 21 if we're being a little more aggressive, and our 21 is one of the moving averages we use. We never use the 8. The 21 is okay to use. For me, I really typically like our 50 or our 100 as the level that I want to enter on. Desculpa, I'm talking Portuguese. Sorry for my neighbors. My neighbors are being a little bit loud. So, but it's okay. So everybody's just kind of getting home right now. So as far as the Aussie New Zealand, we have trading below our 720 here. And so right now we're pulling back to our 50, right? All of our moving averages are below our 720. So we have trend to the downside. We're bearish on this trade. So we had pushback to our 100. So we could have placed our order on this 50 as the rate got closer to the 100 moving average. We could have dropped our sell order here on the 50. Right now it's a little bit too close for comfort for us to drop that order there. So I would place my order maybe here on this 21, or I'd wait and see if the market moved up closer to my 100 before I drop my order in on this 50 moving average to short. As far as my Aussie US, we are trading above our 720. So this is kind of the same thing that we had in the Aussie CAD and the Aussie yen. We're just waiting on a pullback past our 50 or close to our 100 or past the 100. You can see we got it here, and then we got it here where we actually crossed the 100. So we could have bought yesterday on this 50 or maybe even on this 100 if we were placing an order on this based on this particular pullback here. We could have placed an order on the 100 and we'd be profitable at this point. As far as the CAD yen, you can see that we have full trend to the upside here, mature trend. All of our moving averages are above our 720. We've pulled back once yesterday towards our 100. So our buy point would have been on our 50. Would have been slightly profitable there. Not great, but we'd have been slightly profitable at this point in time. But our idea is that our preferred direction and our momentum is still to the upside here for the CAD yen. So we'll be waiting for any pullbacks similar to what we had yesterday towards our 100, or so that we can drop our order either on this 50 or on the 100. As far as the Swiss yen, we're trading above our 720. All the moving averages have jumped over except for our 200, which is kind of lagging behind here. Hopefully that will go ahead and jump over the 720, and that will give us a mature trend to the upside. So we do have trend. Our 50 and our 100 are above the 720. So if this comes down below those numbers, below those levels, the 50 and the 100, I'll drop my order here on the 50 or the 100 to buy. As far as the Euro Aussie, we are trading back now towards the 200 here. We see that right away. We're trading below our 720. So we're trading, we're looking to trade to the downside here. So we'd be looking to sell, but we're past our 100 enough to drop the order there on the 100. So I'd right click here, go to trading, sell stop, and drop my order right there on that 100. I could also use the 50, which is down here at the same level as the 21, which is about 161.85 or so. If I want to be a little bit more conservative, it's a few pips, but it's okay. It's, it's just a little bit more conservative trade for us, but it gives us an exact point to enter, right? If this continues up further past the 200, like what we got here, then I can take this order and slide it up to the 200. But I want to see some distance here before I do that. I want to see some distance away from the from the 200, before we do that, just to give it some space, because if it's going to commit to the upside, it may not go straight up. So, it may bounce back around. So I don't want to be too close to the current rate. I want the rate to commit to moving my direction before I get into the trade. Now here's the Euro CAD. This one we're going to pass over right now. We can see our 720s coming right here through the middle here. We don't have trends set up either way here. Rate is above the 720, but our moving averages are not above. So we're just going to leave that one for right now. Euro Swiss, we are trading above our 720. We have this nice move back, this nice pullback that we got going on here. And right now we're sitting just a little bit below the 200. But our our offer or our ask price is sitting right here close to the 200. So I don't want to place my order here. I'll use either this 21, the 100, or the 50 moving average as my entry point for this Euro Swiss. I would probably go ahead and say the 100. The 21's very, very close. We could use that, but I would say I'd want it to commit at least to this 100 moving average before I would enter. So I'd right click there, go to trading, and go buy stop. Right now, these moving averages will change as the price changes. So you can improve your price if you need to. If the moving average goes lower, then follow the moving average. Check it every couple of hours or 2 or 3 hours or so. And if we haven't been placing the order and the moving averages change your order. Right? Improve your order. So as long as you improve the price, that's always good. As far as the Euro Pound, we are trading below our 720, well below. There's a lot of space between our 720 and our 200 to the downside. So right now, though, we don't have an order. We'd have to wait for us to pull back here, maybe towards this 200. We got it yesterday, and then we had a nice move down. But right now, we're sitting right on our 50 and our 100. Right near the 21 as well. So it's too close for comfort. So we're going to skip that one. As far as the Euro Yen, we're trading above our 720. Nice mature trend to the upside. We're going to wait for a pullback to our 50 or to our 100 before we buy into this uptrend. As far as the Euro New Zealand, we're trading well below our 720. And so now we've got a nice pullback going here. We passed the 50. We're here kind of, in between the 50 and the 100. So we could drop our order to sell here on this 50, right? So we right click, sell stop on our 50, right? We could also use a 21 if we want, it just depends on what you want to use. I like the 50 and the 100. Trading to the upside here, we're well above our 720. We've got mature trend to the upside. And so we're just waiting on a pullback past our 50 and our 100. We got it yesterday. We got a nice pullback past the 50. So we could have dropped our buy here on the 50 while this rate was hanging out here just above our 100. We drop our order to buy here on the 50, and then we would be profitable right now at this moment. As far as the pound Aussie, we can look at this one. We see our 720 here, just kind of across the middle here. The rate is just very, very tight. All the moving averages are tight to the 720 here. We don't have direction here. So I'm really not interested in a trade here. If I had to do something, or if there was only one thing I was going to do, I'd maybe short here on the 50 because everything, all the moving averages are below the 720. They're a little close, and the rate may not commit to being over the 720 like it is now. So at most, I would short here on the 50. Because if it resumes itself into the downtrend, then maybe that's a good move for us. There is some space here to the downside. There's some pips that we could definitely get. Maybe 20, 30 pips out of it, then fine. As far as the pound CAD, we're trading above our 720. Our moving averages have just set up our mature trend to the upside, but there's not a lot of space here. So we're going to let this kind of develop. We want to see it pull back past maybe our 100 or 200, definitely past the 50 before we buy on those moving average areas. You can see where we pull down here. We kind of almost tested our 720 here. So we could have bought on any of those moving averages and we would have been profitable right now. As far as the pound Swiss, we're pulling back now. Our rate is below our 100 and our 200. So it's right in the middle. And then we're trading above the 720 though, so we're buyers. So that means that we can drop our order either here on this 100 or on this 50 moving average. Maybe we'll use the 50 to be just a tiny bit more conservative and allow a little more space between the current price and our order. And then, but if the momentum or the preferred direction kicks in again, then we should tick that off and then go to the upside. There's some definite pips to be gained to the upside from here. And that's the pound Swiss. The pound Swiss, when it gets going, it gets a nice, it has some nice movement once it gets going. Now, as far as the pound yen, we are trading them above our 720 here. We had been going a few days now without any real pullbacks. But yesterday's trading day, we did get a pullback past our 100 here. And so we would have bought either on this 100, maybe on the 50 or 21. Either way, we would have been profitable on that trade. Right now, we got to wait, though. We got to wait till we get another pullback to get the right opportunity. As far as the pound US, same thing, trading above our 720. We're just waiting on a pullback past the 100 or the 50. Sorry about that. I don't know why my trackpad is always moving my chart. So we're waiting for a pullback past the 100 or the 50 here or past the 100 moving average. You can see we did get that yesterday. We also got it on the 24th as well. We got another one on the 23rd. So we've had 3 days right in a row where we've got trades down to our 200 and it jumps. Down to the 200 and it jumps, down to the 200 and it jumps. That pattern is continuing. So we're just going to continue the pattern on that, right? The one thing I noticed though is that we're not really breaking the high. We haven't broken the high just yet. So we'll see if we can break this high or not. Right now, where the rate is above the 8 moving average and just kind of staying up above, we may get that. We may get that continued move to the upside. So we probably hold on to some of those positions. As far as the New Zealand CAD, we're trading, all the New Zealand's are trading above the 720, so I don't even really have to show you that. Take my word for that. We've been seeing that all week now for quite some time and all of last week too. So we know where the 720 is. It's below all of our moving averages. Our moving averages now are in order to the upside on this New Zealand CAD. We've pulled back here to the 50, but not quite below it. We could drop an order here on our 21, but it's a little too close for comfort for me. So I'd probably not place that particular order right now. I'd really be waiting until we drop below the 50 or below the 100 in order to buy. New Zealand Swiss. Now this one has traded below the 100. So I could drop my order here on our 50 and feel very comfortable, right? So go right click trading, buy, and place my buy stop there at the 50 moving average, which right now is converging with the 21 at the same location, right? So that's how I play the New Zealand Swiss. New Zealand Yen, same thing. Here's our 720 on the bottom. We're pulling back now. We've pulled back to the 50, right? And so we didn't really break the 50. We didn't really break the 50. So we're going to be waiting for a pullback past the 50 towards the 100. And then we can buy into that particular trade. New Zealand, Singapore dollar, same thing, only we did drop down here to almost the 100. And right now we would be entering our order or bidding or have entered our order here on the 50, right, to buy. So we would have done that and we'd be waiting on this continued movement to the upside because that's the preferred direction. As far as the New Zealand US, we're trading in the upward direction. We're trading on a bullish, just like we were with all the other New Zealand base pairs. We're trading bullish, so we'd be buyers. But we need to wait until we get a nice pullback past our 100 or past our 50 in order to drop orders on those levels. As far as the US dollar CAD, we're trading below our 720 here. So we're going to be waiting for pullbacks now past our 100 and our 50 moving averages. We had gotten a pullback past the 50 yesterday. We got a couple of them actually. And then so we could have shorted on this 50 or maybe on the 21 and we'd have a profitable trade. As far as the US dollar Swiss, we are trading below the 720. We've got a major, mature trend to the downside. We've got the moving averages actually opening up and spreading out here. We did trade quite a bit away from the from the 50 here. We kind of traded in a straight line down. We got a lot of wicks going on, but we got a lot of red candles straight down. So I did place an order to play a buy back towards our 50. So we're going to see if that still pans out. I think that it still may pan out for us here. That's a contrarian type trade. So if it doesn't work out, I'll just shut it down. Right now it's a little lower than where I want it to be. I might just shut that down. I'm not really worried about it. I want to shut it down when it's advantageous for me to do it. As far as the US dollar yen, we are trading here just below our 720. The rate just dropped below the 720. Our 200, our 100 are below the 720, but our 50, 21, and 8 were above. Right now, they just happen to drop below. We don't have any trend really set up here. So if I'm going to do anything, I'd have a short maybe here on this. I'd have a short maybe here on this 200. So I had a short sell stop already placed based on the 200 from back here from last night. It didn't get triggered. So what I'll do is I'll go ahead and just slide it up there for tonight. That's a great thing about it. So if the order or if the rate moves back the opposite direction, it doesn't go deep enough, then I haven't triggered the order. I didn't get in. I'm not worried about it. It's just an order that's pending on my account. And then I can move it, in accordance to where the moving average is. So I moved it in concert with the 200 moving average now. Judging on what we see right now, it may actually trigger that particular order tonight. Very possible. So that's our trades. That's our trade opportunities in our analysis of these charts. We're able to do that pretty quickly. What is it? 40 after. So in about 20 minutes or so, 20 to 25 minutes, we can actually go through all of the charts and see what the opportunities are, because this strategy is extremely simple, extremely visible. And so it's very, very easy for someone new who's trading. All right. So once again, happy Thanksgiving to you. I'm going to go ahead and get out of here. There will not be a show for tomorrow. There will be no shows tomorrow, but we will resume our shows. Maybe we'll look at something on Sunday evening. I don't think we'll have shows for the next couple of days. We're going to allow you just to take some time to be with your families and enjoy your holiday. If you're traveling, to do all of that. Maybe you can review some of the older shows that we've have going on, maybe get caught up with that. Also, maybe you can find some time, if you have, just to start maybe your training on the website too. So we do have the course catalog here on the website. I'll go ahead and show you that really quickly here. See, we have our course catalog, and under the course catalog, that will take you to the Forex trading course. It is in English right now. I think what I'm going to do is try to spend some time changing it over to maybe Portuguese. I think that's my next idea here. is, to go ahead and change it. So here's the link for that. And, you click on that and it will take you over to the course. If you are a customer of iLi Academy, you should already have access to it and be enrolled. So thank you so much for your time. Thank you for listening to the show. I wish you all a wonderful holiday and have a wonderful weekend. Please be safe, and we'll talk to you beginning next week, Sunday evening. All right, bye-bye.